Hello, welcome to day 22 of the 30-day money course. And today I'm really excited because we're going to talk about how to start investing in index funds. So stick to the end. However, before we start, I want to share with you, explain the definition of a couple more keywords. Right? I'm Elizabeth Bukor. I'm the founder of Wealth from Little, and I'm also your hostess here on the 30-day money course. So let's get back to explain those keywords. Let me share my screen with you. So that would be easier for you to tag along with what I'm saying. Right. So some keywords before we get into the steps, and I'm going to share with you 5 steps, 5 simple, super simple steps to get started. First keyword is stock market indexes. What are they? You hear the word index fund, index this, and you might be wondering what exactly is an index? Well, an index is a measure used to look at the performance of shares either in a particular industrial sector or in a particular country. So in other words, an index is used to measure the financial health, may I say the financial health of a particular sector or country. For example, like transportation sector can have a particular index and it can be used to measure how healthy financially the companies in that sector is. Or a country can have an index and that can be used to measure how healthy that country is financially by measuring the top companies, how the companies are doing financially in that country. So what's an index fund? An index fund is a portfolio of shares that represent that particular market or a portion of that market. So we know that the index is measuring financial health. So an index fund is now a portfolio, like a basket of shares. So a basket of stocks, like, a piece of every, different companies or that represents that particular market, if it's in a sector or a portion of that market. So it can be in a sector or it can be in a country. I hope you're still with me. Any questions? Okay, let me know in the comments if you have any questions. Okay. Let me give you an example because that might be easier with the example, right? For example, in America, the performance of the top 500 companies in the US is tracked by an index called the Standard & Poor's 500, also known as the S&P 500, if you've ever heard that term before. Now, that's not the only index in America, but it is an index that is used to track the top 500 companies in America. And this S&P 500 index fund would then reflect the performance of the top 500 companies. And these are companies that include the likes of Google, Nike, Amazon, Facebook, Tiffany & Co., a bunch of others, right? For 495 others. Yeah. And in different countries also have similar indexes that track the performance of their country. For example, here in the UK, we have the FTSE. It's the FTSE and it stands for Financial Times Stock Exchange. And we have the FTSE 100 that tracks the top 100 largest companies here in the UK. And that's the index for it. And there's another index called the FTSE 250. And that tracks the top 250 companies here in the UK. And so the index is literally that S&P 500 is an index. The FTSE 100 is an index. And that index is what is tracking the top 500 companies in America and top 100 companies in the UK, respectively. Does that make sense? Okay, good. So when we are talking now about investing in an index fund, we are talking about investing in a fund so if you're investing in an S&P 500 index fund, you're investing in an investment fund that tracks the top 500 companies. So more or less, you own a portion of the top 500 companies, based on how much you are investing. So you own a little piece of each of those 500 companies in the S&P 500 if you are invested in an S&P 500 index fund. Now, index funds can also sometimes are called tracker funds because it's tracking, it's tracking an index. Yeah. So if you ever hear that term as well, then you know they're talking about the same thing. However, two other terms that you might hear, and they're not exactly the same, are mutual funds and ETFs. Mutual funds and ETFs, right? So an index fund can be a mutual fund, or it can be an exchange traded fund, ETF, right? Now, both a mutual fund and ETF can track the same index. So you can have an S&P 500 mutual fund and you can have an S&P 500 ETF. However, an ETF, an exchange traded fund, can be purchased or sold. In other words, it can be exchange traded on the stock exchange the same way you would like a regular stock at any time of the day. So and then unlike a mutual fund where that is actively managed, remember we spoke about what type of investor you are, if you like someone to do the work for you or you're willing to do the work yourself. So if you are an inactive investor, you like someone to do the work for you, you might be invested in a mutual fund that is actually actively managed by professionals. Whereas an ETF is, more of a passive investment because you will choose the ETF and you will manage it yourself, right? So a mutual fund is an index fund, but it's actually actively managed by professionals, and it can only be purchased or sold by that issuer of that mutual fund at the end of the day, right? And that would be at the price that mutual fund is at the end of the day. Whereas an exchange traded fund can be traded at any time of the day. Okay, now that we understand what an index fund is and what a mutual fund is and what an exchange ETF is, we would be talking more about ETFs, because a mutual fund is where you're going to pay higher fees for a professional to do the work for you. And with the ETF, you're going to pay much lower fees, like I've explained before, because you are going to choose the ETF that you want. It's passively managed by an algorithm, and you are just going to choose the ETF and be done with it, right? You're not going to wait for a professional to actually do the work for you, unless you choose to, but right now, we're not. So how to start investing in an index fund? And index fund, I'm talking about an index ETF fund, right? One that can be exchange traded any time of the day. First, you need to open a brokerage account. Now, there are so many brokerage accounts, so many, but I'm just going to share from my experience based on the two that I use. I would recommend Vanguard or Passfolio. Now, you don't need to use these, but this is purely what I would do. So it's from my point of view. So I would open a Vanguard, especially if you're in the UK or in America, or if you are in South Africa, Nigeria, I would open Passfolio, and there you still have access to index funds, ETFs. You have access to the S&P 500 ETF if you want to invest in the top 500 companies in America, and you have access to so many others. So once you open your brokerage account, right, the next thing you sign in, the next thing is you want to choose your index fund. So you want to choose what you're going to invest in. Now, based on what platform you're on, how you choose it is different, but it's still pretty simple. If you have any questions, do let me know. Third thing, once you've picked the index fund that you want to invest in, e.g. S&P 500 in ETF, once you pick it, you want to read the key investor information or any small print. There'll always be a document attached to it. So you want to read any small print so that you understand completely what you're investing in. Next, number 4, you want to fund your account. So that means putting some money there. And once you put money there, you're buying a certain amount of shares. Number 5, you are an investor. And that's it. Open your account, choose your index fund, read the small print. Please read the small print. It can seem boring, but please do. With this, you're able to manage expectations. You understand the likelihood of the risk of that index fund. And it's a great habit, because as you start investing more and more, it's a good habit to start now, so that when you start doing more riskier investments, you are able to spot any red flags before you get invested in it. Number 4, fund your account. 5, you're an investor. And that's it. So email me day 22 done once you finish this. Now, you don't have to start investing today, but I want you to start researching, check these accounts, decide what account do you want to open based on your country, and understand, just start read about each, which brokerage account you want to open, and make a decision of what your next steps will be. And that's your assignment for today, to decide what your next steps is actually going to be, what your next step is going to be. Okay, and I'll see you day 23. Bye.